Hello and welcome to Upstack America's Oracle EBS Financials Functional Training. My name is Bob and I'm the lead senior consultant for Upstack America. And I have Victor, who is also a senior consultant. And today we are handling lesson 4 of the fixed assets module. And Victor, please walk us through.
Thank you for the introduction, Bob, and welcome everybody to this lesson. In this lesson, as Bob said, we are handling FA lesson 4, and the concept that I want us to look at is asset grouping. So by the end of this session, we will see that there are three main ways that assets can be grouped in FA module, and we will see the implications of each of this way of grouping the assets and how to go about it. Okay, so that is what you should aim to understand by the end of this session. So we already know quite a bit about FA module. We talked about the books in our previous session, and that we enter assets in our corporate books, okay? And we can also copy those assets to our tax books, okay? Now, when we are entering assets in our books, there are various ways which we can group these assets, okay? And the three ways in which we can group these assets is by their categories or asset category, their asset key, and the location. So we are going to look at each of these groupings and what they mean as far as the asset is concerned, and what we can be able to do with that information. All right. So there are three ways to group assets: by asset category, by asset key, and by asset location. So let's start with asset category, which for all intents and purposes we can say is the main and perhaps the more important way of grouping assets. So when we define assets or when we group them by category, we can actually define categories and subcategories. We are going to see how to do that later or in a few moments. Category grouping by asset category is based on financial information. When I say financial information, what do I mean? I mean depreciation rules or the depreciation method, if you want to call it that, and also by the corporate book. Okay. So when you create an asset category, there are a couple of things that you specify. You're going to see that too. So you create the category. All right. When you create that category, you specify the book, the corporate book, for which assets belonging to that category can be entered. All right. When you define the category, you also define the depreciation rules for that category. Okay. So all the assets that are added under that category will have the same depreciation rules. Okay. And you can also attach the categories to different corporate books. Remember, we said you can have different corporate groups attached to or linked to a single ledger. So you can have categories entered for these different corporate groups. You can have the same category but in different corporate books. All right. So I know it's a bit abstract, so let me try perhaps to make it a bit more clear. We are going to see examples later, but let me just try and make it a bit clear. So when we talk about categories and the subcategories, for example, one category you can have is maybe, and it's the one we are going to use, computing equipment, all right? So under computing equipment, we can say that's your main category. You can have various types of computing equipment. You can have desktops, you can have laptops, you can say printers are part of that, scanners maybe if you have them, right? So all those fall under computing categories, computing equipment, right? So now when you purchase a desktop, right, and you want to add it to your assets, what will you do? You will go and select this category called computing equipment. When you select computing equipment, you will enter the subcategory, which is a desktop, right? So you will enter this desktop that you have purchased. Let's say you have purchased a HP desktop, a certain model number. So you'll enter all that information, all right? And of course, you will select the book which you're entering this asset in. All right. So in order actually to enter that particular desktop, this asset category has to have been added to the book, all right, or to be associated with the book. What I wanted to clear up is just what we mean by the categories, all right? So you can have that example, for example, that example whereby you have a desktop. That desktop will fall under the category of computing equipment, and particularly it is a desktop. So select the category and then you will enter the information for that particular asset, which is the desktop that you acquired. So this information and entered under this category groupings is important for various things. Reports, these asset categories can appear on reports, okay? It's also important for capital budgeting, as we're going to see, particularly the major category, which is something that you have to specify, is what we enter capital budgets against, okay? And of course, you can use it for queries. You can query assets under a certain category, all right? So that is the first way we can group assets by category, and as I've said, we can say it's the major way of grouping categories because it is mandatory, all right? And we're going to have a clearer understanding of all this as we proceed. We can take this as mainly an introduction on these features. So the next way we can group categories, we can group assets is by their location. And as the name suggests, this just describes an asset's physical location. You want to know where your assets are located, right? If it's maybe a piece of machinery, you want to know where it is stored or something like that. Or if it is a vehicle, you need to know where it is, the area where it is operating in, right? So asset location is pretty straightforward, and the implications of this information is that it is important for property tax calculation. So when you're paying property taxes, it's based on your location, all right? And as we're going to see, for this reason, you have to specify for your locations, you have to specify a state for purposes of calculating the property tax. But other than that, it is also used for queries, and that information can also appear on reports. Finally, we have a grouping of assets by asset key. And when you group assets by asset key, you're grouping them based on descriptive non-financial information. Okay. So this information has no financial implications at all on the assets. All right. You can come up with the various ways or the various dimensions you might want to capture in your asset keys. You might want to group your assets by something as, don't want to say trivial, but an example just to show how random this kind of information can be. You can group your assets based on the shape or the size or something like that. Basically, this information is non-financial information, and it is also optional. Okay, there's you don't have to enter this information, and there's a way to do that. And of course, this information is important when it comes to queries. You can query your assets by the key, and you can also have this information appear on the reports that you generate. So we have covered the three ways in which we can group assets, which is by category, by location, and by the asset key. So now that we know the various ways of grouping these assets, how do you actually go about it? In order to come up with all these groupings, we have to utilize the Flexfields technology, which we are familiar with from previous modules, all right? General ledger, particularly where we use the accounting Flexfield, all right? So in FA, you have these three key Flexfields: the asset category key Flexfield, the asset key Flexfield, and the asset location Flexfield. We know how the Flexfield works. They allow you to enter like various types of information in one field, right? In general ledger, for example, you have one field that contains multiple segments for your account combinations, right? So it's the same technology that is utilized so that we can define these groupings. And you just go and you select this particular flex field, and then you go and define the segments which represent the dimensions you want to capture in your groupings. Okay. So again, now we are going to go and look at the peculiarities of each of these flex fields and see what we can and cannot do within them. So let's start again with the asset category flex field. Again, as I said, you know how this flex field windows work. For example, when you're creating your chart of accounts, you go to the accounting flex field, you enter the name of your chart of accounts, then you go to the segments and you enter the name of those segments, right? And then you associate them with a value set. So that's the same way you do this, all right? We are going to see a few differences. For example, you just don't go and create an asset category flex field. You actually utilize one that already exists, but that's information for another lesson. But in your asset category flex field, a maximum of 7 segments is allowed. So you cannot have more than 7 segments. And of course, you have to have at least one segment, right? And the maximum width of the combined field should not exceed 30 characters. So the values entered in each segment combined should not exceed 30 characters. The other thing we should take note is that one segment has to be qualified as a major segment. All right. I already mentioned this when we were talking about the groupings. So one segment has to be qualified as the major segment. And this is particularly important when it comes to capital budgeting. It is against these major segments that we do capital budgeting. We enter budgets per major categories, okay? The other thing about the asset category Flexfield is that dynamic insertion is not allowed. So again, we are still coming back to these features that we are already familiar with. Remember, we have dynamic insertion also in our accounting Flexfield that allows combinations to be created on the fly. So this does not fly in asset category Flexfield. Dynamic insertion is not allowed. So you have to go to the categories window to create valid combinations, all right, or valid categories. In the same way, for the accounting Flexfield, if you disable the dynamic insertion, then you have to go to the combinations window to enter the valid combinations. So here, dynamic insertion is not allowed at all, so you have to go and define your valid categories. So what would a category Flexfield look like? All right. So assuming our Flexfield we have created has two segments, this would be maybe something it would look like. The first segment is the major segment by name and by qualifier. So we have to qualify this, the segment qualifier, and say it's the major, right? In this accounting Flexfield, the same way you have to select a balancing segment and a natural account. You have to qualify, right? It's the same way in this Flexfield, you have to have a major segment. So in the major segment, you would associate the segment with a value set. That value set, for example, could contain these major categories of the assets you might have. You might have computing equipment, you might have vehicles, you might also have what? Maybe buildings, whereby you say you have warehouses, you have storage locations or stuff like that. And then you will have a minor segment whereby you can select the subcategories. So under computing equipment, you'll have a value set. Under computing equipment, you'll have desktops, laptops, printers, okay? Under vehicles, you will have subcategories of a car, a pickup truck, a lorry, maybe you have trailers and stuff like that. You can create this minor value set as a dependent one, okay? So depending on what is entered here, it will give you appropriate results in this field, okay? So if you select computing equipment, these are the values you get. If you select vehicle here, then these are the values that you get: car, pickup truck, lorry, okay? So we will see how we can create dependent value sets, but you can also have them as independently validated value sets, right? But that's something that we will see clearly when we are doing the practical implementation. All right. So let's go to the asset location Flexfield. Same kind of logic as far as the Flexfield is concerned. You are allowed a maximum of 7 segments, and the total width should not exceed 30 characters, right? One segment will have to be qualified as state segment qualifier, and this is important because it will be referenced when your calculating property tax liability for your liabilities in terms of property tax. Okay, so the state location will aid in that. The difference between this and the asset categories Flexfield is that dynamic insertion is allowed, right? So you don't have to define valid combinations for your locations. For example, if you have a state and the city, as shown in this slide. So once you have a state, maybe it's Florida, then you'll select your city, which is Tampa or Miami or Jacksonville, and it will be validated on the fly. Okay. Can have the second state, Massachusetts, and the corresponding cities. So you pick the one where your asset is located. You can define many more dimensions because, as we have said, you have allowed 7 segments. So you can come here and say after city, you have the actual building where the asset is located. You can even go further ahead and enter the actual room where the asset is located. Okay. So that's our asset location, Flexfield. Now, finally, we have our asset key Flexfield. For our asset key Flexfield, you have a maximum of 10 segments allowed. So it's more than the other two, which were 7 each. And dynamic insertion is allowed. So this allows you to enter various types of combinations in terms of your asset key descriptions. So you can have maybe shape, size, color. I'm just coming up with this and also to demonstrate that this is pretty descriptive non-financial information that you can enter in this particular Flexfield. All right. So we have looked at the various ways we can group assets, and we have seen how to go about it. The ways we group our assets is by their categories, their asset key, and the location. Category is mandatory, and it is based on financial information. You have asset location, whose importance includes calculation of property taxes. And of course, we have the asset key, which is non-financial information. We also know now that in order to create these groupings, we have to make adjustments or to configure these Flexfields for each grouping, the asset category, the asset key, and the asset location. And each of these Flexfields has their own peculiarities and particular settings that you have to do. For the category Flexfield, you have to qualify one of your segments as a major segment, and you cannot have dynamic insertion allowed. For your location Flexfield, you have to qualify one segment as a state, and dynamic insertion is allowed, and it's also, that is also true for your asset key Flexfield. So now you should have a good understanding of this concept of asset grouping, and from here now we can start planning on how to set up our module, starting with creating these Flexfields, all right? And then we'll go and do other tasks that system setup tasks that we need to do in order to have a functioning FA module. Anyway, Bob, unless you have something to add, we can end this session there.